Hello and welcome to this Thursday's morning market briefing. We've got lots to talk about, but firstly, US companies dive into convertible debt to hold down interest rate costs, as well as that Iran says blasts near commander's grave killed more than 100 people. We've got lots to talk about in the charts, also with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around till you see that. Before we get straight into it, make sure to subscribe. But the first article to talk about, of course, is these US companies. Now, US companies have been using convertible bonds in a move to keep interest rate costs down. This comes as issuance of convertible debt climbed by 77% last year to $48 billion. Now, we've been covering, of course, the rise in interest rates, which, not only the US has been experiencing, but largely these key major Western nations and economies. And this has been having widespread effects across the globe. But, of course, it does have those great deal of effects on those domestic companies, which we're talking about here. And obviously, when interest rates then do go up, this affects the way those companies may issue debt. They may issue debt to accumulate that cash that they need to invest in their business. But those bonds obviously have their interest rates attached to them, and so when you issue that in a time where interest rates are very high, you obviously have to contend with that. And it does seem that many of these companies are now looking towards convertible debt as a way to use debt to their advantage, still get that cash that they need to invest, but avoid the usual issues which arise from bond rates during these times where interest rates are very high. And this is something that's, of course, very important to stay on top of, as largely companies have been struggling during this high interest rate period that we've been experiencing, whilst we are now seeing those companies recover as we emerge out of that, and we're expecting rate cuts soon. Ultimately, understanding more about how US companies and other companies in these high interest rate economies are dealing with the issue of high interest rates and the way that's affecting their debt, is going to be important to understand which different companies may cope better with these economic struggles. So it's so important to always keep your eyes and understand what's going on in these markets, and especially capital markets. Now, this kind of issuance of convertible debt makes it one of the only areas of capital markets to return to pre-COVID levels. And this is very important to note when we're kind of coming out of this period of COVID and the economic struggles which have come along with that. It's always important to stay on top of what kind of levels the market is returning to after those kind of periods. And what's interesting to see is these different kind of markets and different assets which are returning to those pre-COVID levels, and then there are certain assets which then don't, and comparing them and understanding why. And it is interesting to see how, because of those high interest rates that companies are now having to deal with, this is a kind of tool and a kind of economic kind of tool which they can then use to get around this large issue at the moment within the economy, and still return to those pre-COVID levels, where obviously they weren't dealing with those high interest rates and they weren't dealing with the issues which arose during COVID. Now, this trend is also likely to continue this year as companies refinance a wave of old debt. As obviously, if your if your loan or bond or anything which you've used to accumulate debt does come to the end of its contract, ultimately you're then going to need to start refinancing that. And with the way interest rates are at the moment, it obviously does seem that companies are going to use whatever tools they have in their toolbox to basically get around those issues. Now, convertible bonds are popular with young tech and biotech groups which struggle usually in the traditional bond markets, and this is no surprise, as obviously these are two kind of sectors within the stock market which have a great deal of risk, require lots of startup capital, but can fail very easily, as of course, especially with biotech, that's something which relies completely on the kind of trial and investment into these potential drugs, which may be very successful, but at the same time may completely fail. And so that's a very important industry which relies on convertible bonds. And now, according to those at Bank of America, convertibles typically cut between 2.5 and 3 percentage points from the debt's interest rate. So a significant cut for those companies that need that. Now, with larger companies also joining in, seeing as interest rates have risen. Now, these convertibles provide lower rates than usual bonds, but cannot be immediately diluted. So that's the kind of key thing which these companies are able to kind of exploit, is that lower interest rate. But at the same time, the downside for them, of course, is that it cannot be immediately diluted. And that's in contrast to IPO, convertible bonds issuance is well above the average between 2009 and 2019, that decade, whilst IPO volumes are still sitting well below pre-pandemic levels. Now, US investment grade companies have a record $1.26 trillion of debt to refinance over the next 5 years, according to ratings agency Moody's, which is up 12% from the previous half-decade period, with junk-rated companies having $1.87 trillion across both bonds and loans. So a significant amount of debt in the capital markets at the moment. It's interesting to see how these companies are getting around the issues of high interest rates, but keep your eyes on this topic most certainly. That's all to talk about on this article. Next to talk about, of course, is Iran. Now, more than 100 people have been killed in Iran after 2 terrorist attacks, and this came during a ceremony to mark the death of a military commander. Now, this is very important to note, of course, as only yesterday we were discussing the issues and worries of a regional conflict within the Middle East. Already, tensions are very, very high as a result of course, the Israel-Hamas war, which is taking place as we speak. And as a result of that, tensions are high in surrounding nations, and especially in nations such as Lebanon, which in yesterday's video we did talk about how Israel had struck southern Beirut in an attempt to take out the Hezbollah. One of the Hamas leadership figures, as Hezbollah did report him dead. So there was kind of that worry that maybe other parties and Lebanon with Hezbollah involved may then get involved in the conflict further. Of course, there's been worries as a result of the Houthis engaging commercial vessels within the Red Sea and their kind of efforts to disrupt any Western efforts to continue passage through that area whilst attacking Israel. So of course there is a great deal of kind of tensions within the Middle East at the moment, and Iran is, like Israel, one of the key players within the region, and funds many of these proxy groups which have been attacking Israel, including Hamas within Gaza, which obviously did kind of start this kind of Israel-Hamas war, but also Hezbollah in Lebanon and other groups within Syria, Iraq, and of course the Houthis in Yemen. So lots of groups which rely on Iran, and Iran kind of becoming more and more involved in these kind of clashes in any way, or even experiencing a terrorist attack may cause them to join into these wars, just as a result of the kind of confusion and chaos. Now, it occurred in the city of Kerman, where crowds gathered to commemorate Qasem Soleimani, who was the Revolutionary Guard's leader before being assassinated by the US. And this was a very memorable moment during the Trump presidency, as it did spark fears of whether Iran and the US were to go to war. Now, Iranian officials reported that 103 people had been killed and 211 injured, marking it the deadliest attack in Iran in decades, with the death toll expected to rise further. Now, these attacks come amid tensions in the Middle East over the Israel-Hamas war, which of course we've been talking about and is a key issue within the Middle East at the moment and could expand into a regional conflict, which would dramatically affect both, international supply chains and therefore inflation and company growth, but also, greatly affect the world's oil supply. And, this is affecting all different markets and all different asset types within the stock market. Gold, oil, US equities, you name it, is probably being affected if this conflict does become a regional war. So that's why it's so important to keep your eyes on this topic most definitely. Now, the attacks have been brandished as a terrorist attack with no group or country yet blamed. 2 explosions took place within minutes apart from both. The site of the Wednesday attack was highly symbolic, with Qasem Soleimani in Iran being considered a hero and was Iran's most powerful military figure before he was assassinated in Iraq. Previous attacks similar to this have been blamed by Iran on separatist groups, but Iran has also blamed Israel for several assaults before. But these attacks are more targeted and involve officials who are members of Iran's military. For example, Israel assassinated Iran's top nuclear scientist in 2020 with an IED. So, the worry is whether Israel somehow tie this to Israel and Iran somehow get involved in the war in Israel already, and this pulls in a range of a range of nations, and the conflict does become one that's more regional. But whilst Iran publicly supports Hamas and other Shia anti-Israel groups, they have said that they do not want to be dragged into a broader regional conflict. So that's important to note, of course, but definitely keep your eyes on this article and topic as a whole, as Middle Eastern tensions do remain very, very high. That's all to talk about in this article and the articles as a whole. Next to talk about, of course, is the charts, where quite a bit did happen yesterday, and as we do go into today, there's certainly many things to note. Now, firstly, to begin with, probably the least significant of the day actually is the US 30 and US indices as a whole, where we can see the US 30 especially tapering off, just slowing down, as we did end off last year on that big rally after breaking, obviously this line is representing the previous highs for the US 30, the all-time highs for the US 30, which were broken by the end of last year as a result of obviously the Fed's more dovish rhetoric. But despite that, we have tapered off going into the new year, and it is a question of, will we retrace now before continuing higher, or is it a time for price to kind of consolidate, range around, and wait about before we see another move? So keep your eyes on this. Next to talk about though is the dollar, which is kind of more significant at the moment because the dollar has sort of now made a double top, or at least is interacting with a key liquidity and resistance level, which could be seen as a double top area. So as we have here, this Fibonacci retracement tool, we were looking at price and talking about how price was likely to interact with one of these levels, 38.20, 50%, 61.80, 78.60, these key Fibonacci levels and liquidity zones, which price would most likely interact with and take a significant move to the downside and continue that bearish kind of momentum that we've been seeing on the dollar. That said, throughout this entire week now, we've just seen that price pressure to the upside, and yesterday we've seen that continuation with price moving all the way to the upside level around 102.646, and this is a key level that we've previously highlighted as a key liquidity zone, so an area where it's likely to have a great deal of sell orders, and this also is the area of a double top almost. If we do look at this previous retracement where price did come up to this level before moving to the downside, and that was the most recent kind of high of the kind of range that we've been seeing on the market. So this is the top of the price range, so it will be interesting to see how price does interact with this level. It's not looking good for those bearish kind of bearish fans on the dollar just considering the fact that we have now pushed through the key liquidity and Fibonacci zones, which you might generally expect price to move away from if we were expecting a continuation to the downside. Those being, of course, the 38.20, the 61, and now the 78.60, all of which have now been broken and pushed higher than. So keep your eyes on this. But on the same topic, of course, euro dollar needs to be talked about, as price, mirroring the dollar, is now interacting with this key liquidity zone and reacting in somewhat of a bullish manner from it. The key question is, will we see this continuation of a bullish move away from this double bottom that is being formed and this key liquidity zone? If we do see this continuation to the upside, even if that's just represented by a few bullish candles, that does give us that kind of confirmation that this was just a kind of larger retracement than usual, because we're heading into the new year and we're now ready to continue to the upside. What will be interesting to see, though, as we're talking about the dollar, is how NFP does affect these pairs, dollar pairs, as that is taking place this Friday, and will have a great deal of effect on perceptions of how the Fed will shape its monetary policy. Therefore, it will shape how people view the chart. So keep your eyes and listen out for that. Next to talk about is pound yen, which is continuing to kind of range about, really. It is now interacting with this kind of upside liquidity zone. It's acted as a key area of resistance before, but we're not entirely sure on how price will actually interact with it. Will it sell off from it or not? But it will be interesting to see how pound yen does kind of fight its way out of this range that it's in at the moment. So definitely keep your eyes on pound yen as things are looking interesting. On the question of Bitcoin, though, we have seen a dramatic sell-off yesterday as price took a serious move to the downside. Now, yesterday we were actually talking about in yesterday's video about how there were these key liquidity zones which price may come down and retrace to before continuing to the upside. And the price level that we were mainly considering was the 38.20, which, as you can see here, has been destroyed by price in this dramatic move to the downside. Now, the reason why we were initially talking about this 38.20 level is because this was where price had made its high in terms of the range which price has been moving around in since nearly the start of December, after we did see that strong rally to the upside. So usually when we break out these ranges, we do hook back, we do retest that key top of that range, and then move further to the upside. But we did not see that. In fact, we saw Bitcoin just drive extremely far to the downside and even break below the 78.60. The fact that no wick has actually closed below it, though, no body of the candle, has closed below that 78.60, though, does kind of still, give us that potential for a bullish kind of retracement away from that and a continuation to the upside. But ultimately, you'll have to wait and see today in today's trading day. But some things are certain to note, and that is that Bitcoin is highly volatile at the moment, so keep your eyes on that. Next to talk about, though, is gold, which has now pushed all the way to the downside and broken below the key level which we were expecting price to retrace to. It does seem that a lot of price yesterday was just highly volatile and just did not respect these key Fibonacci and liquidity zones, as we did see price break below the 38.20 that we did expect price to react from, as this was kind of the area which price had broken out from. And is now sitting around the 50%. Of course, price can now move to the upside from that 50%, but ultimately the fundamentals will be at play here. So definitely make sure that you're understanding what's going on economic data-wise, as this is what will be highly pushing, as well as world tensions, as these kind of together will be heavily influencing the market. Lastly to talk about, though, on the charts is oil, which has seen now a bullish push today. Not too much to note on oil. It's hard to really kind of grasp how oil's doing, what it's kind of setting itself up to be. If I do draw out this kind of level, we are kind of nearing that. Not sure how significant that is, though, as a key liquidity zone, but obviously price has reacted to it a few times before, acted as an area of accumulation and distribution before, resistance, support, resistance. So quite possibly this acts as a resistance again. Keep your eyes on oil, though. lastly to talk about, of course, is the economic calendar, where we do have quite a bit more data coming up today than the previous days of this week. Now, firstly, we will be getting the French inflation rate figure, a key one to listen out for to understand Eurozone monetary policy a bit better. Next, we will be getting the Eurozone, German, French, Italian, and Spanish services figures. So lots of services data coming out today in reference to the Eurozone. So for a better picture on the Eurozone economy as a whole, definitely listen out for those figures. As well as that, we're getting British mortgage data as well. So mortgage approvals and mortgage lending, key data for sure. As well as that, we're getting the German inflation rate. So that's the most important economy of the EU. Of course, Germany's had, kind of many economic issues recently, but Eurozone inflation is on the downside at the moment in comparison to some, so definitely keep your eyes on German inflation rate. As well as that, we're getting US employment figures and jobless claims data, so definitely listen out for that. And finally, we'll be getting US services figures. So lots of data to note. We've covered lots on the articles though, lots on the charts and lots on the economic calendar. That's all from us at Wildwood Capital. Have a great trading day. See you later.